I have nothing against ETFs, but I think ETFs are a lot like a Tesla. Putting gas in a Tesla, it doesn't make sense.
Okay.
You know, financial literacy, it's a tragedy in this world. It's a tragedy. It's insane. We're not shooting bullets at each other, but currency war is happening right now. Trade war is happening right now. Everything in life is a pendulum, in my opinion.
100%.
And so we're heavy. We went heavy regulation. We're swinging hard the other way. And we're going to have to come back a little bit because there are bad actors in every space. There will be people that take advantage of that. But the dollars are gone, the fiat currency's gone, and crypto reigns supreme. I don't think that's going to happen. But let's just say it does, that mega event. You can take your Bitcoin out as Bitcoin.
Today, we're interviewing Chris Klein, the COO of Bitcoin IRA, a company at the forefront of bringing digital assets into retirement investing, navigating the intersection of innovation, paying as little in taxes as possible, and personal finance. Chris brings years of experience and insights into these questions, and today we'll explore not just technology, but the human element behind it.
What is the best crypto to hold to avoid taxes?
Any crypto that's inside of a retirement account. So any crypto of your choice that's in a retirement account, because whether it's Ondo or Tau or Bitcoin or Ethereum, all of them can live and reside in that tax umbrella savings.
Okay, so it doesn't matter if I hold XRP or Solana or Bitcoin. If I have it in an IRA, there's going to be tax incentives I can focus on.
Anything inside an IRA, it's equal, all the same rules.
Okay, and you know, with this new administration, there is like this big, beautiful bill that everybody's talking about now that has all these tax cuts, and you know, there's a lot of word, I'd say, what's the right jargon that's being thrown around. What does this mean for crypto? And what does it mean for taxes as a holder and an investor that is in this space?
Yeah, so the bill, you're seeing states are making decisions. Missouri made his decision, no capital gains on certain cryptos, or at this point, I think it's still in the House. It's not actually a law yet. This big, beautiful bill, I was actually reading about it this morning at breakfast, and it's complicated. There's a lot of moving parts to it. There's a lot of cuts in certain places, add-ons in other places. I think there's 50 million going to the border, 170 million going to the military to beef up, and then cuts in Medicaid, or not really cuts, but eligibility requirements. And the overall tax savings is SALT, is where based state and local taxes are. We get a deduction, all of us, for what we pay in our state and local taxes every year off of our federal, and they're trying to increase that. But there really isn't a lot of language yet about cap gains, taxes on tips, those types of things, and it's going to be close. The House got voted on. The House narrowly won, and in fact, I was reading. I didn't realize this. There were 3 Democratic congressmen that recently passed away, elderly. So it wasn't like something shady happened and they're just dead all of a sudden right before this vote.
Like 110 years old.
Literally one. Yeah, and that's the problem with Congress. We can dive into that forever. One of them died literally the day before the vote, and that you don't have a replacement. You can't. There's no proxy voting for dead congressmen. Unlike in some states. You can't wheel them in. It's not like New Mexico where like 5% of dead people vote every year.
Minimum need a heartbeat.
And so now it's got to go through the Senate, and it's got to get. The way that they design it, it's not necessarily a super majority, but it's got to get at least like 60 votes. And there's a narrow growth there. And obviously, a lot of these guys are going to the polls here in about a year in midterms. A lot of senator races have in midterms. There's a clear mandate when they poll people about Doge savings and efficiency. I think it's like 73% of Americans are go for it. Yes, let's cut things. But when it comes to the taxes, who gets to save, who doesn't get to save, where all that's going to line up, it'll be very interesting. I wouldn't be surprised to see what goes in. It's kind of like they say that Congress is like a meat grinder. What goes in and what comes out are going to be very different things.
Now, what do you expect from this? We have J.D. Vance speaking at the conference this week. Vivek Ramaswamy is speaking live right now as we're hosting this interview. Are you bullish on Donald Trump in terms of his crypto administration? Do you think Bo Hines and these executives are going to establish great crypto incentives? Or, you know, this is more of a question for investors that are maybe about to get into Bitcoin, but concerned with the outlook of this budget or this bill that is passing?
Yeah, you know, it's funny. The meme I saw the other day was everybody else in the world, and it's like that dog that's in the house that's on fire, and it's like just like the world's on fire. And then below it was the crypto bros, and it was the picture from The Hangover where they're all playing craps and they're smiling and having a blast. And it does kind of feel like we're in that tale of two cities right now, right? I mean, I see people I have friends that are in the fashion business in Los Angeles and they're really worried about tariffs. They're really worried about a potential recession. And I'm over here just smiling every day. You know, I go to bed and I look at my portfolio and I wake up. And I think that this administration is going to prove itself to be very friendly as far as what did we endure for the last 4 years? no, 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 you can't do that. There's no rules around it. Just no, you can't do it. It's kind of like when you're like 2 years old and you said to your mom, can I do this? And then you ask why, and it's like, because I said so.
Yeah.
That's how we felt for the last 4 years, is because the SEC or any other three-letter agency said so, everything was difficult. I mean, I remember when we started this in 2016, we had to set up a separate entity called Digital IRA because I couldn't get a bank account under Bitcoin.
Yeah,
like it just couldn't happen.
And 121 or whatever it was like debanking everything.
Everybody was getting debanked. So that's the flip. So now you've got a very friendly administration and overall government. I think you got some congressmen that are getting there. I would love to see a youthful push. I'm 40 now, so I'm not saying I'm going to run for Senate someday, but I'm not saying I won't. And I think that we've got to get some, I hate to say it, but we got to get some of our grandpas and great grandpas out of Congress and get up to speed of what's actually happening in today's world.
Keyword great grandpas.
Yeah, great grandpas.
Yeah.
I mean, there's some, and there's some career politicians been there for, on both sides of the aisle for 75, 60, like, it's crazy. The number, when our founding fathers created this country, to go be a senator you were a statesman after your career. Yeah. So you were a lawyer first, you were a farmer, and then when you were in retirement, that's when you went to be a statesman. Yeah. And because you had the experience of building a business, you were an entrepreneur, you knew how things work, so you could help lead better. Now we have people coming straight out of college going straight into politics.
They're groomed.
Yeah, they're basically groomed for it. Some of it's in boarding schools, they're getting ready for it.
Yeah, it's like they have P. Diddy as an advisor or something.
So this administration, I think, is shifting us back towards what I like to see, but I don't know if they're going to get everything they want. And also, crypto gains are awesome, having capital gains changes, those types of things. But remember, this is one administration. We just went through a very difficult administration for us. Hope is not a strategy. So you can't just hope that taxes will go away in the future. Yeah. They'll probably go up by the time you and I reach those ripe ages of like 75, 80. And to have a retirement put aside that's using the tax tools that we have available, which have been around for a long time, will be much more ideal than having something where you're just, I just hope that then when I finally sell my crypto, the administration will be eliminate all taxes. Like that's not going to happen. That's not a good strategy.
It's not feasible. And this kind of leads to a very big concern people have right now, where there's a very big possibility of a war that's taking place. And so as somebody that would be investing into a Bitcoin
it's already,
IRA,
I mean, we're not shooting bullets at each other, but currency war is happening right now. Trade war is happening right now.
We got metal detectors at schools now. So it feels like it's pretty close to home sometimes, depending on how you look at it. But, looking at just what's happening with Ukraine right now, with Russia, Trump's coming out and be like, what's happening with Putin? And Putin's almost being assassinated by NATO. If I have Bitcoin in an IRA, and let's say this does expand, this does explode, what does that mean for my position there if I need to access that crypto?
So just like if you had an IRA or a 401k, you take a distribution if you needed to. Obviously, any tax advisor, anybody with a brain would tell you not to do it until you reach the age of retirement. 59 and a half is the age where you can start taking out funds. You always get taxed on taking funds out except for a Roth, no matter what age you take it out. But if you take it out too early, you also get a penalty. And sometimes that can be upwards of 20%. So it's all about timing and strategy there. If you need it, though, and that actually happened with, 2020. I mean, we see a lot of folks, even in our game, we have 14 billion in assets under custody. Not all of that's crypto. We're a very large trust company. So, and there's folks that are taking funds out, and we always survey them, why are you taking this distribution? I need the money. And in bad recessionary environments, those types of things. So you always have the ability. It's not locked up, but there are penalties for taking it out early. But it's always there. I mean, it's a matter of, you do have to, we don't just let you log into your app and move it to a wallet. That'd be silly. That's part of our security, our Pentagon of custody we created. But you go through the steps, the documentation, the AI verification, the authentication of your face, and all the moving parts to it. And in a day, usually, I mean, just about as fast as you take money out of your Fidelity IRA, it's there for you. And the cool part is, let's say the world really explodes. And now I'm not a doomsdayer, but let's say fiat currency as we know it, which there's a lot of guys at the conference this week that this is their wet dream, right? Is the dollars are gone, the fiat currency's gone, and crypto reigns supreme. I don't think that's going to happen. But let's just say it does, that mega event. You can take your Bitcoin out as Bitcoin from here. So if you're buying ETFs, which I know a lot of people are kind of getting their toes wet with ETFs. I have nothing against ETFs, but I think ETFs are a lot like a Tesla. Putting gas in a Tesla, it doesn't make sense, right? Like, so it's cool to have a Bitcoin ETF, but you're still in this dollar-derived asset. You still have to liquidate to dollars to take it out. You can take out your Ondo if you want, your XRP, all those things, and move them to your private wallet when and if you need to, especially upon retirement later.
Yeah. Now, maybe one of the reasons why people are scared of IRAs is because of the word retirement. And, maybe they feel like they're locked into this position, but I want to talk about the power of compounding. You're managing multi-billion-dollar clients or multi-million-dollar clients. What is like the go-to strategy that you are working with these million and billionaires that are using this compound interest from an IRA?
The guys that are hitting those numbers, some of them will hit it with getting lucky on a couple of assets, right? Kind of like if you look at Peter Thiel, he's got $5 billion in his Roth IRA, but a lot of it was he took his shares from Facebook, and the way he invested in Facebook was with his Roth IRA money, which you can do that. You can invest in businesses. That's a possibility. But the ones that grind it through are the ones that start early. And they don't have a short-term mindset. I remember from the last show we were on, there was some mentality in the comments of, hey, well, I'm locked into this. But you should be thinking 40 years. This isn't a 2-year. We're not even thinking about this cycle. I'm thinking when we talked about it last time, how are we going to get to $10 million Bitcoin? It's not going to happen overnight. It's going to take some time to get there. Well, a really interesting thing that happened to me when I was in high school, and actually congratulations to her, my Spanish teacher, Mrs. Gunkel, she just retired. She did 70 years of teaching, so she just retired this year, her last year as a teacher. And I remember the day.
70 years?
I know. She was gangster.
Whoa.
Yeah. And we
She got
walked
run for Congress.
she was, I would vote for her. I would vote for her. We walk in. This is Spanish class, mind you.
Yeah.
We walk in, and on the board is a explanation of compounding interest and how it works and how an IRA works. Now, I had tested ahead, so I was like in junior year Spanish as a freshman, and I would really just like this class because all the older girls were in the class.
Oh, nice.
And I was but I actually paid attention that day. My Spanish is terrible, but as you can tell, that day something clicked for me, and it made sense. And I've actually tried to carry that forward because financial literacy, like they were talking about it today at the conference, it's a tragedy in this world. It's a tragedy. It's insane. We were working on a project before we changed it up, but late last year I wanted to go on the retired.com Express, the Bitcoin IRA Express. I wanted to do a whistle stop tour.
So this is separate from Tinder.
Yeah, definitely. I wanted to go on a whistle stop tour on a train. I actually mapped the train out from Los Angeles on San Francisco over 15 cities. I was going to take my daughter with me. She's 11. We were going to stay on the train and go to all these cities. And every stop, we were going to go to a middle school or an elementary school and teach elements of financial literacy about Bitcoin and those things. And I've been doing it in her school since she was in TK. I went and sat 4 kids together. Every preschool has this like Fisher Price kitchen store. Yeah. So they had that. So we put it in the front. That's Izzy's store. And I had the kids dress up in different eras of time. One was a caveman. Another one was a Roman soldier. Another one was dressed like we are. And another one in an astronaut uniform. And the caveman comes in with a rubber chicken, and he barters and trades for a rock to get what he wants from Izzy. The Roman soldier, I gave him a silver coin. He comes in, does the trading. The kid dressed like us, I gave him a $20 bill, which, by the way, that kid pocketed that $20 bill. And so I never got it back, but he buys something. And then the astronaut, I gave him my phone to trade Bitcoin to make that transaction. And that's where it starts, these foundations that really get us thinking about this evolution of money over time. I think all the audience believes that Bitcoin will change the world, and it's already starting to do that. So why have such a short-term mentality about your aggregation for it? You really need to be thinking, this is something, yes, I am going to be locked into this Bitcoin for a while, but you're not. You're locked. You should be locked into any type of retirement. You should have that piece put to the side. And a lot of us, we're in a retirement crisis in America. Folks are behind on it. Corporations aren't offering 401ks as much. Matches are down. All these things. So you have to kind of self-help. You have to build these things up for yourself. And we talked about that strategy with the $7,500. It starts there, a couple $1,000 every year. Grind through it and have that long-term mentality.
So I want to dive into some of the success stories of these individuals that are using compounding interest. We're talking about financial literacy. Vivek Ramaswamy sees it as well. We want to start educating our young kids about this. He talked about the kid taking and pocketing the $20 bill. Sounds like he already understands the government entirely. That's exactly how it works. You're never going to get your money back. But with these clients that you have, what is a success story on average? Is it 10% of their portfolios going to an IRA? Is it 5%? What is that minimum that gets someone kickstarted into a compound portfolio? Or is it just like simply $7,500 a year is your goal?
That's a great question. I mean, getting off zero is key, right?
Yeah.
So just getting some exposure. People that have done a little bit more of their homework, have gotten dialed into understanding what crypto and everything, they've done their research. I see them somewhere between 5 to 15% of their overall portfolio. They're dropping into this. But there are those people. We had a guy early on that quit his job at Intel. He had a big old 401k, like about $500,000 a 401k at Intel. He was still working. He left his job. He quit so he could get his 401k out, because if you're still working, it's stuck there. And it's talk about being stuck. You're chained to the desk and you're chained to your 401k over there. So he got it out. It took about a month after he left his job to finally do it. And he's thrilled, right? I mean, this was back when Bitcoin was $450, $500 a coin.
Yeah.
And he went all in. But the average person is doing that, and they're also constantly aggregating. There are guys that trade as much as you and DZ do. You know, you guys are big. You guys trade a lot. You guys are looking at the charts. The long-term hodlers that are set it and kind of forget it have been really successful.
Yeah.
You know, just put it there, and for almost you forget you have it, and you check in once you get your annual statement or something like that, and you see how you're doing. The ones that trade a lot, I mean, that's just like in anything, stocks or otherwise. Sometimes too much frequency can hurt you, right? It just because you're just making too many moves. But that's kind of the overall strategy. And really, for folks, we talk about compounding interest, and the Oracle of Omaha, who's retiring finally. Let's talk about a great grandfather finally stepping aside.
He might run for president.
Yeah. That'll probably be the next thing. He lives by compounding interest. That's his whole philosophy, and it's powerful because if you're just making yield and the yield's going back into the principal, and you're making yield on the bigger piece and the bigger piece, the charts show you. That's what Vivek was saying today. It just shows you that's how it grows over time. But let's not forget the conversation about compounding inflation.
Yeah.
So I saw a great Twitter post. It might have been one of you guys that posted it, where it was, if everybody says inflation's down, why do I still feel like everything's so expensive?
Yeah.
And the guy did it great. He goes, let me put it to you this way. I weighed 200 pounds 10 years ago. I gained 12 pounds year one. I gained 15 pounds year two. I gained 9 pounds year three. And this year I only gained 3 pounds. So technically my weight gain is down, but I'm still fat. Like I'm still overweight, basically. And that's what we're dealing with is every year, just because we're below target of 3%, the 3% from last year and the year before, this isn't a reset. We don't get to press a button and we start over. That all adds up to it. And it's been really strong. If you look at any chart since 1971, when we went off the gold standard, every chart shows you healthcare costs, higher education costs. I mean, every chart will show you this. It's a consistent pattern that just every one of them are up there in the pricing. And that's not going to go anywhere. So part of compounding interest, is that going to be able to keep up with compounding inflation? Because prices, I mean, we put so much money in the market right now. We're at $144 trillion in global monetary supply, I think. I wouldn't be surprised to see that jump another 30% this year. Because we're going to print our way out of problems. Europe's going to print its way out of problems. China's going to, everybody's going to do it. And the more money that's in circulation, everything gets more expensive. And it's on a runaway train. You know, it's like, speaking of trains, it's headed right to that wall.
Yeah, the toothpaste is out of the bottle, right?
And you're not putting it back in.
You brought up a good point. This just comes back to the financial literacy aspect, is we're dealing with disinflation, not deflation, right? And it's like, we are not going to see deflation ever. We've never seen that in the history of the Federal Reserve. They always have a 2% target. Too painful. It just won't. And you'll see certain sectors that might come down, or you know, eggs might come down, but your overall inflation on your rent, your utility, your gas, etc.
But think about it in terms of Bitcoin is what really makes.
Well, and that's where you have to find an asset that not only acts as a store of value, but is going to continue to mature as an asset class as well, that can outpace that inflation. And this is why I love it when like Schiff is at this conference, flying his private jet, coming in acting like he's modest, and he's just selling books, right? But when you look at even gold's performance to Bitcoin, gold's at $3,300. But if you bought it in 2011 or 2012 at $1,600,
not much.
If you talk about inflation, it's pretty much break even. So, congratulations.
And it's been through all of the perfect storms. You got wars, you got financial crisis. These are the moments in time where gold is supposed to just soar. It's this time to shine, and it's just not doing it.
Barely keeping up with how much you have to print out of this cycle.
I think Schiff said something about how gold's outperforming Bitcoin. The year ain't over yet, buddy.
The year ain't over yet.
Let's see where we're going to be in December.
Adjust for inflation.
Of course,
we always leave out when you lose a interview or a debate to Richard Hart. You're not in a good place.
I met Peter once, a long time ago. But he's got
I've read a few of his books.
And that's his personality. And a lot of these gold guys, and you see a lot of these folks that are out there that they sell their calculation and their program to make people rich. And I see it all the time living in LA. They rent this space that looks like you're on a private jet, but you're not really on a private jet. All this kind of stuff, right? And the Rolexes are fake. And one of the reasons why I love you guys at Discover Crypto, and I love a lot of crypto guys, we call that bullshit, right? We don't listen. There's maybe years ago there were these guys, the grandmasters that knew it, just like the guy that was selling the actual commemorative Bitcoins on Instagram, right? I remember that guy. We just call that bullshit. That's what I love about our community is we don't let that riffraff in. Yeah, it exists. It's out there. There's rug pulls. There's all that. We see them. They'll keep happening. Every market has that. For the number of fines that were paid by JP Morgan Chase last year in the billions and trillions was well more than any fines that have been paid by crypto guys.
Yeah.
Because they'll break the rules knowing I'm going to make 10 times more money breaking the rules than what the fine's going to be.
Yeah.
So it's like a price of doing business to them.
Well, and unfortunately, it's like even breaking the rules are like traditional barriers that were lobbied in by some institution. You know, it's like, how do we not have perpetual contracts in the United States, but we're in Las Vegas right now, and I can go gamble $1,000, no question. I can go gamble $500,000.
You know, that's something
no question asked.
I'm staying at the Wynn, and we got in last night, and maybe this will change because when general admission starts tomorrow the next day, but I don't feel like I'm seeing, like, crypto guys, we're not on the tables.
Oh, most retail, they have no money left.
They're putting every dollar they have, they're putting more on.
The reason why I don't see them is the only people who have money left are in the high stake rooms.
Yeah,
and
that's those guys.
No,
but because they call us gamblers, they call us all riverboat gamblers.
They do.
But I walk through a casino floor and I see a lot of riverboat gamblers
no
with no
Bitcoiner
strategy,
is
no
selling
plan.
their Bitcoin to go gamble.
Yeah.
Right? They won't do it. But it's just an interesting
That'd be the
concept
dumbest
that
thing in the world.
we're in Sin City right now, and you can take out however money you want and go put on black or red, and your bank's not going to question you. They're not going to ask you, even though we know these casinos are corrupted.
Yeah.
It is not a fair game at all.
The house always wins. You play long enough.
Always wins. And if that's the case, we can't even, banks are like, no, you can't spend $1,000 on a perpetual based contract. That's way more fair. It's like, how does that system work? Yet now when you want to launch a perpetual in the US, you're getting fined. The SEC's on you, at least under Gary Gensler. Now the SEC and the CFTC are like, hey, we messed up bad. We want you guys back.
But that pendulum's going to swing the other way too. There's everything in life is a pendulum, in my opinion.
100%.
And so we're heavy. We went heavy regulation. We're swinging hard the other way, and we're going to have to come back a little bit because there are bad actors in every space. There will be people that take advantage of that. Yeah. It's with the whole gambling thing again.
I think we spend more on AML, right, than we actually save.
Yes,
that's
exactly.
Crazy. That's
but
terrible.
Also the it's not cronies, but the corruption, I guess, of stockbrokers. I mean, if you watch The Wolf of Wall Street, it's all about revolutions, right?
Yeah.
You never let the guy walk away with his money because the house always wins the longer you keep betting. That's why Fidelity and these monster houses and these guys making $50, $100 million bonuses that work on Wall Street. That's one of the reasons why I've done a lot of different asset classes in retirement over my career.
Yeah.
And Bitcoin's the one where I've actually watched regular people put $75,000 away. This nurse, I remember, she had a 403B, and she thought she was going to have to work for the rest of her life because she just couldn't build up a retirement. Yeah. And she took a piece of her 403B, put it in Bitcoin, and now she's been able to retire five or 6 years earlier than she was.
Of course.
Spending the time with her grandkids. Like, people win when it comes to crypto. The house doesn't win when it comes to crypto. And that's what makes, and I think that's probably what drives the banks and the regulators and the government crazy.
But now we're seeing that pendulum shift. Right now, institutions are starting to win a lot more than retail. It's like, and that's why we've been such large advocates for get into this, right? And now it's why they need strategies like IRAs. They need tax havens, right? We have to have a diverse portfolio to be able to keep prospering here. And then that's why I just got back from New York helping with the mayor's meeting at the New York Summit. It's like, let's revoke BitLicense. Let's open up perpetuals. Like, if we don't lobby and as retail,
I was kind of happy that BitLicense concept didn't take off like wildfire back in the day. Because I remember going through it for us to offer clients in New York. There was a time where we couldn't offer New York clients. We couldn't offer Hawaii clients. There was times, like I said.
40 million traders?
Yeah, it's
insane. And
it's
because a banker...
Yeah. It's cronyism.
That's all it was. It was like, well, we know that because they're not doing it through us. We're not going to make money off the transactions. Are you kidding me?
I guess we'll just move to Jersey.
I guess I'll go to Vegas. Yeah, exactly. Or just move to Jersey. But that complexity still brought a very toxic
you
interaction.
can't advertise on LinkedIn still?
For crypto?
For anything crypto, you can't advertise.
Did not know that. LinkedIn's like the crony little hub, though. That's like
in 18 when it tanked, and then in 23 after FTX and Alameda crap. As an advertiser and a person trying to grow a business, there was a time we were locked out of everything: Facebook, Meta, Google, all of them. And now you have to go through your process. And now we're back in. We've been in for years. That you can Google us and do all those types of things. You can even Google me. I think I come up as pictures with you and DZ now because we've been doing so good. But LinkedIn, we just went to go do. But they call me every day. They want to help me with recruitment. They want to help me with all these. They want all these tools, but they won't let me just run an ad that has to do with cryptocurrency.
We still get called. Not even like you used to think it's $10,000, right? That's a magic number before they call you and check. Like it'll be a $4,300 check,
random, right?
And then they'll be like, where's this coming from? And like they ask you 10 different questions. You're like, oh, it's analytic. Like still some banks to this day are still messing.
They got that blanketed approach from SB 121 plus some executive order, then the Operation Choke Point, which we all know happened. Like
people want to be like, that doesn't exist.
It happened.
Try running a crypto business in 2022 or 2023. Dude,
getting a bank account was tough. I mean, anything. And then what was worse is I worked with my own personal bank for years, and my partners also use the same bank, and we one of them had a Coinbase account, and not only did they shut down our business accounts, they shut down our personal accounts. Yeah. And it was like, and they didn't even want to talk about it. The local branch loved us, knew who we were, felt bad, but the corporate was like, we don't even care.
So what's your prediction here for just Bitcoin moving into 2026 now? We have a new administration, SAB's gone, the SEC's opening up, the CFTC's opening up. With your investors and your clients, are you guys looking to allocate now more to these portfolios? What's your guys' kind of 5-year outlook on crypto in your IRAs?
Yeah, I mean, obviously Bitcoin's a big winner in the whole thing. I like a lot of almost every client's a lot like Kelly when we did the example last week, where he likes to trade alts to harvest more Bitcoin over time. That's what a lot of folks will do.
That scares me.
Yeah,
that screams institution.
Yeah, in a lot of ways, right? It does. So there's a lot of folks there. I think that if folks, I was talking to Kelly about this. Existing clients that have been with us since 2015, 2016, they're long-term hodlers. They're like, call me when Bitcoin's $1 million a coin. That's where their head's at. And I love those. Those are my kind of people. Yeah. But there's going to be so we're going to hit, I think, about 130 at some point in the third quarter, maybe sooner. And that's when FOMO is going to happen again. We don't have FOMO. Retail FOMO hasn't happened yet in this run. Even though we're knocking on 110's door, but going up to 112.
Feels like a bear market.
It's like people don't even realize it. It's like, what is that from Ocean's 13, where they're making the earthquake happen, and it's like, oh, we got to hit them harder. Obviously, like we got to get a little bit better price for. But then when they wake up, now this is what scares me about the new entrants, because we've seen it every cycle. You and I, we're not going to sweat a 10, 15, 20% drop day. We've been through enough of these. We've seen them. It's why I have gray hairs. Like it's where it comes from. New entrants aren't used to that. If 20% down is, oh my God, we're in a recession in a traditional market. In crypto, that's just a Tuesday. And it takes some intestinal fortitude that it's from experience. Like you have to experience it a few times. So if you get a big wave of new entrants, FOMO kicks up, we're going to start getting into that 150 zone, maybe even touch 180. If you just go off the M2 correlation charts, add a little bit more FOMO, maybe touch 200, and then it will crash down 50 grand. That's what it will do. That's the cycle. It's math. It just happens. And that's that new entrance could get perpetuated to a bigger dip because of all those new folks coming in. That kind of worries me for this year.
Yeah, and we're watching the Google Trends. You can literally watch the search features. It's like XRP, type it in, it's at like an all-time low. Compared especially just November.
Which is crazy to think about with where the price. But that just goes to show you price doesn't correlate interest.
Exactly. But I also think it's back to what we were talking about with the inflationary issue. I really just think households don't have enough personal savings to reallocate right now. And like 4 weeks ago, we were supposed to be in a Trump session here today, right? We were calling for a massive Black Monday. Jim Cramer's famous, sell everything. This isn't over. Now we're up 40% and the SPX is hitting all-time high.
Well, there's that long-standing sell and may go away thing. Yeah. And I'm curious what will happen. Last summer was kind of boring. I remember the conference was in Nashville, and we were at about 40, 50,000?
Well, historically, we always drop like 20% after the conference.
Yep, always. It's
been
a boom. Yeah, it's a boom.
So is this time different?
I don't know. We're staying flat right now, so we'll see.
It's doing well, but it's even if we came down to 91K, it's like you said, this is normal for the cycles. It's very cyclical, and this is why you have to have that long-term mentality.
Yep, that's really. I think that's the biggest thing especially for Bitcoiners. We preach to the choir a lot here. I'm sure the audience is loving what we have to say, and we're two pretty smart guys talking about things. You're very smart, by the way. I like you a lot. You actually intimidate me. You're the scariest one.
Make my wife watch this now.
Yeah, you're the scariest one.
You hear that, wife?
DZ's the friendliest.
She owns me. Yeah.
Kelly's he just gives you you spend 10 minutes with Kelly, you're ready to go. You're like the Kool-Aid man, just ready to burst through a wall. But you're very analytical.
I want to go do ayahuasca with him in Morocco. That's what happens with Kelly. And we'll go talk about Bitcoin spiritually.
Yeah. But I think
connect the Satoshi.
For the audience that believes in what we're saying, we're preaching to that. Have a little bit more long-term mentality and use the tools that are given to you. The Roth IRA has been around since the 1970s, designed by a guy named Edward J. Roth from Delaware, because we were in a savings crisis in America, and they wanted to incentivize us. They wanted to say, hey, if you save, we'll give you tax-free growth, tax-free gains, tax-free distributions. They built it around that. Use those tools. And does that mean you're going to be locked into an IRA for the next 40 years? Good. Yeah. That means you're building your nest egg. Are you locked in Bitcoin or Ondo or FET for that 40 years? No. You could you can make all the money you want to make on this cycle and just sit in cash, or use the same tool. We have real estate people. We've got guys that use, we have a guy that out of Kentucky that actually buys John Deere tractors and leases them to farms. That's his retirement strategy. We have people that hold in actual barrels of oil in a storage facility. All these tools are available. You don't have to just stick with the ABCD funds that are out there, but you have to have a long-term commitment to it.
100%. Chris, I could talk to you all day. Thank you so much for coming on.
Good to see you, buddy.
And I'm sure we'll have you on very soon.
Yep.
Thank you so much.